Red alert, red alert. US banks are facing extinction. Extinction. If it were not for an emergency lending program that's going on right now, nobody knows how many of these banks would already be failing. We're going to get into it and give you all the details behind it. Hey, everybody, you're watching Bull Boom Bear Bust. My name is JJ, back with another dose of economic reality. So let's go ahead and get right into it. Let's go to a chart here. And first, let me explain what this is here. First of all, before we get to the chart, actually, let's take a look at what happened back in March. And this is the Federal Reserve Board announcing it will make available additional funding to eligible depository institutions to help assure banks have the ability to meet the needs of all their depositors. Now, remember, in March, we had the string of bank failures. We had another one back, was just in October as well. But people at the time thought this was going to be short term. They thought this was going to be something temporary just to get the banks through this quote unquote difficult period. Well, it turns out the difficult period is still happening right now. And in fact, it's getting worse. Let's go to a chart next here on this funding facility, which is really a bailout in disguise. Of course, they don't want to call it a bailout because that would cause a lot of people to panic, most likely. So here it is. You can look to the left here. It was zero up until March of this year. And we saw the surge in this lending facility. And instead of decreasing the amounts needed to keep these banks operational, we've actually increased it. Look to the upper right-hand corner, up to $113 billion here. The usage of the Fed's emergency funding facility for the banks soared higher by 3.9 billion to a new record 113 billion, and that's the biggest jump, folks, since June of this year. But yet most people wouldn't know this. Most people don't know this because it's not on the business news channels. It's hardly being talked about. Where's CNBC? Where's all the business news networks talking about this? You have to dig for articles to find out about this. This should be the number one story in financial news. But what are they talking about? They're talking about the stock market being pushed to the highs of the year. They're talking about any good news they could find. Basically, it's hopium that the central bank's going to come in and lower rates is what the markets are. They're high on hopium, hoping on more cheap, easy money coming down the road. So, folks, this is huge. This is red alert. How much longer can this go? Do they have infinite backing for these banks? It's 113 billion. Will it go to 200 billion? Nobody knows, but we do know that the banks are broke and broken. And this further outlines the two-tier economy. We have the stock market over here, we have the banks over here, but we have the people and the U.S. consumers over here. And how good they're doing is widening, drastically widening. The consumer, the people, don't have endless bailouts to keep their operations going. If their household doesn't make enough money to meet the expenses, you know what's going to hit the fan, unlike the banks. Let's just take a look at some of the consumer sentiment that's out there right now. And this is at a bank rate. Americans' paycheck puzzle, almost 2 in 3 workers got a pay increase this year, but say they lost ground to inflation. But we've been hearing that the consumer is resilient, that the consumer is strong, and that the consumer has the economy growing because of their spending, which is really people swiping credit cards and going into debt. That's the definition of economic growth, is how much debt people can take on, basically. And so this is an eye-opener. Almost 2 in 3 workers got an increase this year, but it's not keeping up with inflation. But we're told just the opposite. We're told the consumer's strong, that everything is fine. Well, if everything was fine, why do we see the amounts of debt that people are accumulating setting new records every quarter? So it doesn't add up to what the official explanation is or what the official word is on the economy. Things don't add up. The dots aren't connecting. Of course, that's why I have you and you have me, so we can connect the dots here together and see what's happening with economic reality going on here. Right, and this has been an artificially boosted economy to begin with, based on easy money, rock bottom interest rates. This whole thing should have fell apart in 2020 when the shutdowns occurred, but 2020 did give a good reason for banks to create more money than they've ever created at any point in history what was it, 40% of all dollars in existence right now were created or printed. They don't really have to print paper anymore. It's all digital and mostly digital. But 40% of all dollars in existence were created since 2020. We also had the stimulus programs, all the forgiveness, the foreclosure rescues, the eviction moratoriums, all the rescue programs, the pause on the student loans, you name it. It was a economic rescue package like we've never seen before. How much spending did we see behind this? We saw exploding deficits, exploding debt, national debt exploding, all these funding, all these programs that were funded to help quote unquote rescue the economy. But why are banks still having to have an emergency funding slash bailout program? Please let me know what you think about that down in comments. More from this article. About 2/3 of employed Americans received a pay increase at some point in the last 12 months, including 38% who said they got a pay raise, 16% who indicated they found better paying jobs, and 10% who noted they earned both, probably a second job or third job. According to a new Bankrate survey, that's up 61% from the prior year's poll during an even stronger year for hiring. By this time last year, employers had already created almost twice as many jobs. But the strides Americans have been taking in their careers is getting overshadowed by the cost of living. So we're told that wages are strong, that wage growth is strong, that inflation is coming down, but yet these strong wages and the strong consumer is not keeping up with inflation, according to a survey. So who are you going to believe? Are you going to believe someone making millions of dollars that puts on a suit and tie, gets up there and reads off of a script? Yeah, we're talking about Jay Powell and all the people at the central bank. Or are you going to believe the people that are completing the survey that are telling you that what they're earning is not keeping up with inflation? Now, you do have probably a lot of those people, though, that are actually spending money that they don't have to spend. And that's the American way, is spend now, pay later, or buy now, pay later. Swipe the card and worry about who's going to pay it later. So a lot of this is the fault of just the U.S. consumer, who is just bent on spending no matter what. We see record holiday travel, even though gas prices are pretty expensive right now. People just insist on spending money and doing what they love to do because it's the USA. We're used to doing what we want to do, right? And we've seen other signs of a severely weakening U.S. consumer. Just recently, we saw oil prices dip below $75 a barrel, and that's even with output cuts, production cuts coming out of the OPEC nations. So that's another big red flag that consumers are really pulling back and stepping out of this spending. But we're told there's record holiday travel. So what is the truth? Well, time will tell. As usual, it's very hard to tell what's happening just by reading the headlines. You have to just kind of add things together or connect the dots and read between the lines. And again, that's what we try to do here on this channel. Let's get into this next story here and more details about how the U.S. consumer is really doing. Why do we talk about the U.S. consumer so much? Because it's consumer spending that basically is the biggest driver of what is called economic growth, which really shouldn't be called economic growth, because when people go into debt and spend money, when the government spends money, that gets added to the gross domestic product numbers, and that's what's used to gauge economic growth. But there's an endpoint, because consumers can't take on endless debt. The government can spend endless amounts of money, but consumers don't have endless debt to take on. Even though credit card companies are raising the limits on people's credit cards, it's not endless. Why? Because people don't have an endless money creation machine like we see out of the government here. So let's talk about the U.S. savings rate. This is how much people have left over, and this is just updated here a couple days ago, November 30th. This is how much people have left over after paying all their necessities at the end of the month, and we didn't see much of a recovery at all. In fact, we're still close to an all-time low. Let's go ahead and bring up a chart here, and let's give you a bigger screen here. If we look to the far edge here, all the way to the right, we see October was 3.8%, folks. That's pitiful, and we're getting close to where we were before entering the 2008 financial crisis. Back then, it dropped down to 2.4%. So again, we're at 3.8%. It had dropped down to 2.4% before the financial crisis. So that's another gauge to keep an eye on, that will let us know how close we are to what hitting the fan. When we see 3.8 drop to 3.2 and then 2.8 and then 2.4 is going to be the next stop, we'll know that we're on the doorstep. It could be in the matter of the next few months. It could take a little bit longer. If everything keeps continuing as we're seeing, it's just a matter of time. I don't see this lasting more than 6 months to a year maximum. So I'll give it next November at the latest. So something big happening within the year here as far as I can see. And remember, if you go back to 2019, I made a similar projection because it was just similar back then. The consumers were getting tapped out. And of course, we had all the programs, the stimulus packages, the stimulus checks, and a lot of things actually helped the U.S. consumer maintain keeping their head above water, basically. So those programs have ended for the most part, but we still have a lot of other programs that are continuing. Look at the bank, again, the bank bailout program, the emergency funding program. All right, let's get into some different data here. Actually, one more thing real quick. Back to this chart. Wanted to bring this up here. Let's just look at the last year for the U.S. savings. Now, as I had said at the beginning of the year, we saw it increase January, February, March, April, and I think that was largely because of tax returns. But now we've dropped back down almost to where we were before tax season started, and we haven't even gotten into the November and December numbers yet. The November numbers will be coming out at the end of next month, or at the end of this month, sorry. At the end of this month, December, we'll see the November numbers. Then, of course, we have to wait till the end of January to see the December numbers. But my guess is we're going to see these numbers drop and the savings rate get even lower. So it's going to be interesting to keep an eye on. Of course, make sure you're subscribed so when you come back, we're going to always keep you updated on this piece of data here, which is I feel is very important, that I don't really see many other people even talking about this. All right, let's get to another piece of data here that points to, I think, some concerning times for the U.S. consumer here. Let's bring up another chart here. This is search for RV lot. RV lot near me. This is a search. If you look to the right edge here, you see a spike up, and this is the biggest spike that we've seen in 5 years. So why would there be so many people now all of a sudden looking for RV lot? Well, I'll tell you the reason right here. It's because the eviction moratoriums have come to an end. The foreclosure moratoriums have come to an end. Consumers are tapped out, but yet even homeowners are afraid to sell because there's not a lower cost place to go move to, because rents are also really high right now. And people looking to sell their home, even though they want to sell, they don't have many options. They know that if they don't rent somewhere, they're going to have to get another mortgage and buy another home at these high mortgage rates. They don't want to do that. They're looking at the high rents. They don't want to pay these outrageous rents. So they're sitting in their homes as long as possible. But people are looking for a plan B, and I think that's why we see this big spike for RV lot near me, because the end is approaching. It's coming near, and it's not going to be pretty. I should say it's not going to be pretty for many people. I think people here on this channel, we've been preparing this for a long time. We've been preparing for this for a long time, so I think a lot of us here will be just fine. Now let's go to another chart here. This is the Housing Affordability Composite Index. We look to the edge, the right edge here of the chart. We see it down worse than before we entered the financial crisis, going back to 2005, 6, 7, 8. Unaffordability now for homes is worse than what it was before the financial crisis, before the housing bubble went bust, right? So very, very interesting. So what else is being done here to try to keep this thing propped up for as long as possible? Well, we have a big drop in the 10-year bond, and that's leading to lower mortgage rates. And who do you think is out there buying all the debt and pushing the bond yields lower? Of course, I think we know it. It's the buyer and lender of last resort. It's the central bank. At least most people know that, I think. All right, so they're doing what they can to keep this thing propped up. They want to keep it propped up, obviously, until I think the selection, which will be November of 2024. Can they keep it propped up that long? Can they find new road to kick the can down? That's going to be the question yet to be answered. But we're going to be on top of it here for you, reporting on it, and hope everyone is doing well. Please let me know what you think down in comments. Hope everybody's having a good weekend. What's today? Saturday. Happy holidays. I got my lights going back there. So please make sure you like, subscribe, stay ahead of the curve here on this channel. Economic financial news. We'll see everybody very soon. Keep stacking, everybody. Peace.